Well, I'm going to begin just firstly with a bit of an overview of where 2024 ended for Australia's visitor economy. Um, Overall, international visitors and arrivals were up 15% on 2023. So we had 8.3 million international visitor arrivals for this time. In terms of the domestic, it's an interesting story. Corinne's going to be running through a bit about that right after this. But we had more overnight trips than 2023, up 2%, 115 million trips. However, the number of nights was slightly down by just over 1% to shy of 400 million domestic visitor nights. Across the visitor economy, the short-term visitor economy, had a spend of $174 billion. So that's up as well on 2023. And on the right-hand side, you can see how that breaks down there. International bringing in 33 billion, a big chunk of that being the education, but also holiday, almost as big there as education as well. However, domestic is significantly more there, as we're currently seeing on the chart there, compared to the international. So with $141 billion coming from the domestic market, and just over half of that being from the holiday market as well. But a good bit of split out there from VFR, visiting friends and relatives, and business as well, actually just pulling ahead of VFR among the domestic audience there too. That's really just to give you the quick overview of some of those key metrics that we look at in terms of visitors, nights, and spend. But we're obviously going to go into this in a lot more detail throughout the report. So to begin with, I'm going to pass over to Corinne, who's going to firstly take us through what domestic travel looked like in 2024.
Great, thank you, Garrett. And hi, everyone. Thank you for joining us. As Garrett said, I'll take you through some of the key takeaways from the benchmark report. So in 2024, Australians continued to travel domestically in high numbers, reflecting a persistently strong appetite for travel despite soft discretionary spend. In 2024, there were 2.1% more domestic overnight trips than in 2023, and domestic overnight spend increased to $110 billion. There were 115 million domestic overnight trips in 2024, which means that for each Australian aged over 15, they took on average 5 domestic overnight trips in the year. So while Australians clearly continued to prioritise travel, they also adjusted travel behaviours to manage costs. Thank you. In 2024, overnight trips were on average slightly shorter, and the average spend per trip fell by 1.2% compared with the previous year. And then to get a bit more detail on where the reduced spend came from, yes, thank you. We'll move to the next slide. So this shows the composition of domestic overnight spend. And in 2024, more than half of the overnight spend came from holiday trips, as Garrett just mentioned. It's the largest component, and it's the only category of travel, domestic travel, that saw a decline in value in 2024 compared to 2023. Domestic overnight business trips were the second largest contributor to spend, and value increased by 3% in 2024 for business travel. Spend also increased on VFR and other trips. So holiday travel was the largest slice of the pie and the only one to see a reduction in value in the year. So we'll now look more closely at the change in spend behaviours for domestic holiday makers. And this chart shows the change in spend on domestic holidays only by category of spend in 2024 compared with 2023. So you can see in 2024, there was a reduction in spending on tours, alcohol and drinks, shopping and transportation. On the other hand, there was an increase in spending on groceries, takeaways and restaurants, and entertainment. This suggests that, consistent with trends in the broader economy, holiday travellers made decisions to rein in some types of discretionary spend, for example, buying fewer alcoholic drinks or purchasing groceries for a self-prepared meal during their trip instead of eating out every meal. We also see that travel and spend patterns varied across the age cohorts of domestic travellers. Thanks, Garrett. So this chart shows some domestic overnight holiday trip characteristics for 5 age cohorts. So you've got the number of trips per year per person on the vertical axis, the average length of their trip in terms of nights across the x-axis, and then the size of the bubble is the average spend per night for that age cohort. So in 2024, we saw that those aged 45 up to 74, the bubble sit higher, typically took the most overseas holidays in the year, overnight holidays in the year, while those aged 75 and over took the longest holidays. But the biggest bubble and the most valuable cohort was those that are aged 30 to 44. And this cohort spent on average $432 per night per trip. Importantly, this cohort, the 30 to 44-year-olds, was the only cohort to increase their spend on domestic holidays in 2024. So they increased their spend per night and their spend per trip. The other cohorts reduced their spend. Now we'll look at domestic business travel. And we see, thank you, Garrett. Now we see a similar story where there were more business trips, but evidence of travel budget pressures. So in 2024, there were 1.5 million more domestic business trips and 3% more business spend. But on a per trip basis, the average spend per business trip declined by 3% compared to the previous year. And the average length of trip also fell. There was a similar adjustment to spending patterns as we observed for the holiday trips, with less spending on tours, alcohol, and shopping, but more spend on groceries and meals. There was also more spend on airfares and transportation, but it may be related to the stronger increase in interstate business travel rather than intrastate business travel. And two other interesting facts about business travel from on this slide. One is that there were more overnight business trips to regional Australia than to capital cities, including the Gold Coast, and that the growth in the business trips to regional Australia was stronger than the growth in business trips to capital cities. And secondly, while business travelers are much less likely than holiday travelers to engage in activities while on their trip, so for a range of social, sporting, or touristic activities, business travelers were actually twice as likely as holiday travelers to engage in the following specific First Nations experiences: participate in traditional activities, attend an Aboriginal performance, or have an Aboriginal food experience. And now I'll just move on to some highlights from the international side. So as Garrett mentioned, in 2024, Australia hosted 15% more international short-term visitors, and spend in Australia by international visitors increased by 17% to reach nearly $33 billion. The average spend per trip also increased in 2024 to $4,311. If we look at where the visitors travelled to in Australia, we see that most states and territories saw growth in international visitation in 2024. So on the next slide, please, Garrett. So the circles with the copper-coloured circles, those figures show the growth in international trips to that state or territory in 2024 compared to 2023. And the figures in the middle purple circles have that state or territory share of international trips. And so you can see that half of all international trips visited New South Wales. We also saw some interesting variation in the largest international source markets across the states and territories. Thank you. So while New Zealand, China, the UK, and the US typically feature, there is some variation. So China was the top source market for New South Wales, Victoria, and the ACT, but it was much further down the list for Queensland and WA, and it was not among the top markets for the Northern Territory. Some other interesting strong growth markets are Japan, which was a top 5 source market only in Queensland in 2024, South Korea, which was a top 5 source market only in New South Wales, and India, which was only top 5 source market for Victoria and the ACT in 2024. So by purpose, trips to Australia for all purposes increased in 2024. The fastest growth was for holiday trips, which is also one of the largest categories of international spend in Australia alongside education. So holiday and education each accounted for over 1/3 of international spend in Australia. Then VFR accounted for 15%, and business trips make up a smaller share of international spend than it does for domestic spend at 6%. Interestingly, Australia's top 5 source markets for holiday travel spend all contributed, or each contributed around $1 billion each, so all very large markets, and they were China, the USA, South Korea, New Zealand, and the UK. In terms of visitor numbers, New Zealand was Australia's largest source market for holiday trips. So international spend in Australia increased in 2024, and international spend for holiday purposes increased, as did most other categories of travel, but international business spend in Australia declined in 2024 by 3%. And so move to the next slide, please. And this category, thanks, Garrett. And this category saw a similar pattern to the domestic side, where there was an increase in trips, but lower spend and a sharp pullback in spend per night. And again, by category of spend, we saw a decline in spend on drinks, tours, shopping, and other. And in this case, other was the most significant contributor to the decline. That category includes convention, conference, or exhibition fees. However, not all of the components of business trip spend declined. There was strong increases in spend on entertainment, accommodation, and transportation. And here, accommodation is a large share of a large contributor to spend, so it was the biggest positive contributor to business spend. And lastly, from me, just a few slides showing some points on Australians travelling overseas. So in 2024, Indonesia was the top destination for Australians travelling overseas, followed by New Zealand, and then strong growth in Australian trips to Japan. Then on the right in the pie chart, most outbound trips were for holiday purposes. Australians also travelled overseas to visit friends and family or for business, but not so much for employment reasons or to study. Now, as I'm sure everyone knows, there were more Australian outbound trips in 2024 than ever before. And on average, Australians took an overseas trip once every 2.25 years. But we saw, as was the case for domestic holidays, the average length of outbound trips was slightly shorter in 2024, and the average spend per trip also declined by 1.2%. However, since there are more Australians now, the number of outbound trips per person is still slightly below its previous peak. And the same is true for outbound holidays specifically. So we call this the propensity to travel overseas, which is the numbers on the right side. So compared to last year, Australians of all ages were more likely to travel overseas for a holiday, but there were still fewer holiday trips per person compared with the previous peak in 2019. By age cohort, the youngest, the 15 to 29-year-olds, were the largest outbound holiday age group. This cohort accounted for more than 1 in 4 outbound holiday trips in 2024, and it recorded the strongest growth in outbound travel in the year. So it was the largest contributor to growth in the outbound travel numbers. Australians aged 60 to 74 years old were the age group most likely to holiday overseas, so the propensity of 0.3 trips per year. Per person, sorry. They were also the most likely to holiday domestically. The cohort aged 75 plus was least likely to holiday overseas and are 10 times more likely to take a domestic overnight holiday than an outbound holiday. On average, across all age cohorts, Australians were 8 times more likely to take a domestic overnight holiday than an outbound holiday. And lastly on this chart, I wanted to point out the cohort aged 30 to 44 years. So that was the most valuable cohort for domestic travel. So this cohort has a slightly lower propensity to travel overseas than the other age cohorts. And this cohort recorded the strongest decline in the average trip length and average trip spend in 2024 compared with 2023. So they seem to pull back the most on their outbound holidays, but they were also the only cohort that increased their spend on domestic holidays. So that's interesting. And that is it from me. Thank you. I'll pass back to you, Garrett.
Awesome. Thanks, Corinne. As you can see, there's several different narratives across the supply side there, particularly even just in a broad scope, what's happening internationally versus what we're seeing domestically, but also by even the age groups and propensity of spend, kind of aligning with what we're seeing nationally and changing behavior as well. I'm going to now go into a little bit more about the supply side, so looking at industry operators and investment. Just a reminder in the chat, if you do have any questions, please follow the Slido link and then pop in the code TRA 2025, and you can put in any of your questions there. What I'm going to run through here is effectively a summary of about 5 different reports that we produce. So across the Investment Monitor, Forecast Report, Business Counts, and a couple others as well. So there's more information about everything, everything that I'm going to be talking to here today. But as a sort of, here's the one-page kind of summary of some of the key metrics going on. Well, when we look at 2024, and some of these measures are for the financial year 2023-24, the visitor economy is a huge part of Australia in terms of the GDP, the jobs, the businesses, and this slide really just shows it in a single snapshot. So in terms of contribution to Australia's GDP, tourism or the visitor economy is just shy of 3% of the national GDP. In terms of what's going into the pipeline, so projects and spend going forward, there's $63 billion of investment in projects, and that's just projects that are over $20 million as well. So there's plenty more than that as well. And this is nearly 350 projects running right now in the pipeline across Australia. Business-wise, it's 1 in 7 businesses in Australia, 360,000 tourism businesses. And when we look at the jobs as well, it's a record number of jobs in the December 2024 quarter and 1 in 23 jobs in Australia. So that is what I would say would be the 4 key stats, if you like. What's the value of the visitor economy for Australia? It's pretty big, and it's right there. But getting into each of that in a bit more detail and a bit more nuance about what's happening across Australia right now. So firstly, looking into accommodation. This is from STR data, which I know several of you will have access to, but just looking at it at the national level here as well, just what's going on in terms of what's available. So this shows the last 3 years, and you can see there by the total number of rooms available in establishments with rooms of 10 or more, that the number's going up year on year. So 335,000 rooms available there. What's kind of interesting though is that and Corinne sort of touched on this as well with a few of the metrics, it's not a single consistent story everywhere and for everybody, quite obviously, but it's worthwhile pointing it out though. So even across the states and territories. So for example, we saw South Australia had an increase of 2.5% more rooms, which was the highest percentage increase. While overall it came from other states and territories. And there are even some states and territories that actually had a decline, NT and WA going down in the number of rooms from 23 to 24 as well. So while overall the story is a positive one, that nuance that happens at a local level is always important too. Obviously, just not the number of rooms make up the story here, but also occupancy rate, and then how much does it cost? So this is the occupancy rate trend for 2023 and 2024. The dark line there being 2024, the lighter line being 2023. Just eyeballing that or looking at the average, you can see that the occupancy rate is higher in 2024, which is fantastic. What's pretty interesting though is that pattern is quite similar year on year. The trend that you see there with autumn and winter being particularly tough, that April through to July period, and real peaks in November and February, January, March area as well there too, at a national level. The third piece of the accommodation picture though is the money. So ADR, average daily room rate, and RevPAR, so revenue per available room. We've popped on here the results of this from 2019 through to now, so you can sort of see. I think it's a fairly common story now to know that the cost of tourism, travel, expenses, what people are paying, but also what it costs to run a business have gone up over time. But this is pretty clearly reflected here in the ADR and RevPAR as well. But even looking at 2022 to 23 to 24, you can see there's a bit of steady growth there as well, in that variation of the average price too. What is again interesting though is how it kind of bounces around throughout the season. So in summer, the ADR is typically a bit higher. For 2024, it was about 251 a night versus winter about 226 as well. So it is a bit of a movement there as well. What happens in that space? But obviously, hotel rooms are not the only form of accommodation. So within our international visitor survey, we also capture where are people staying when they come. It's a pretty interesting breakdown. So firstly, looking at the shorter column there, the international visitors, what you can see is that lighter purple is the biggest group. They're actually more likely to be staying in a rented house or apartment. Of the 73 million nights they're staying, about 32 million of them are in a rented house or apartment. Still, hotels, resorts, motels are a huge part of it though, at 27 million nights there as well though. 1 in 10 also staying in a backpackers or hostel too. The domestic market though, it's very much more dominated by the hotel, resort or motel option, accounting for just over half of all nights there. But that big lightest purple group that we're getting there, actually higher than a rented house or apartment, is for caravanning or camping. And yeah, it's pretty big. It accounts for 23% of the nights. So nearly 1 in 4 nights staying in caravanning or camping grounds among the domestic overnight audience there. Looking now on the supply side into aviation. So we've just got a couple of slides here around it. There's obviously more in the report as well, which we can get into. But first thing to look at, tying in with what we saw internationally, more visitors coming in, we also had more capacity. So more seats, but even in the domestic side, there was more seats in 2024 versus 2023. Now, you would anticipate this would increase. However, as I'm sure many of you are aware, there was a lot of disruption in the aviation sector in 2024. So we saw the collapse of Bonza, the scaling back of Rex, and even with those, we did see a bit of an increase in the available seats on the domestic side and on the international there as well. The other factor though to keep in mind though is how many seats are actually full. So the passenger load factor. We did see this increase though as well. It was 80% in 2023 and it was up to 82% in 2024 as well. And that came out at 82% in both the international and the domestic market there. Looking at the prices though of airfares, and we've gone right back here to 2018 because it's pretty interesting to see the volatility in the last couple of years when it comes to pricing of airfares. So coming out, so there's 3 lines here I should say to start with. So firstly, we've got the economy in the darkest there up the top, business, and then the best discount. Now these aren't the prices, these are indexed prices compared right back to 2002, 2003 financial year. So you can see how things have varied over time. What we saw though is that best discount airfare has really been just yo-yoing around since we came out of COVID. For those who are trying to spot on the graph where the lows are, where the best discount fare is, it's June. So it seems to be pretty much when you look across the years, June's the best time to get a discount fare. But yeah, the domestic airfare index, it's really for economy, it's been quite interesting in 2024. It actually peaked toward the end of 2024 in terms of that index score, but it's starting 2025 at one of the lowest it's been over the past, well, several years as well. Business airfares, though, a little bit more consistent. They don't move around as much. That big spike that you can see toward the right-hand side of the graph in 2024, that is right at the end of financial year. So it'll be interesting to see if that happens again this year or not too. Looking internationally, across our aviation and the offerings there as well, though, what we do see is, and this is direct flights into Australia, is really strong connection there with Southeast Asia. Now, obviously that works as a hub, as does the Middle East, although probably not so much in its current format and what's currently going on over there as well. But in terms of the main place where we're seeing flights coming in, it's from Southeast Asia. That accounts for a huge number of the inbound airline seats that we see coming in. But you can see on the map there the spread where it goes, and also on the right, on the left-hand side, the graph, how that falls out there as well. What we are seeing though globally is that international aviation is increasing. So global capacity is up 13%, and that's about what we're seeing in Australia as well. So we're kind of in line with the global numbers there for airline capacity increases over time. But bringing it back a bit in terms of what's happening on the ground here in Australia, this is looking at tourism-related businesses. Now, this year we split out the number of businesses by tourism characteristic industries and tourism connected industries, and you can read more about this in the report on our website. Bit of a description down there in the bottom there, but to be a tourism characteristic industry, at least 25% of the output from that industry must be consumed by visitors, whereas a connected industry is when less than 25% is consumed. So the example of that would be servos. While they, some do a lot for visitors, on average, the industry is less than 25%, whereas a tourism characteristic industry would be something like accommodation sector. What we see though is when we look across the businesses that are related to tourism, is it, as I said at the beginning of this section, it's 1 in 7 Australian businesses. And this is actually a record high of 360,000 tourism related businesses. There was a little dip last financial year, but what we're seeing is that it has recovered and grown in the 2023-2024 financial year. And when we do look back to COVID levels, it's well exceeded that by nearly about 30,000 businesses as well. However, it would be remiss not to talk about the cost of doing business when you're looking at the business environment these days. So this is showing the producer price index. The light dotted line is effectively the cost of doing business for Australia as a whole. It does go up over time, but what's quite interesting is we've just grabbed the 2 largest business industries within the tourism related businesses there, being accommodation and cafes, restaurants, and takeaway and food services. And you can see they are tracking just well above the average cost there for Australia as well. So that trend is showing that it's higher. The cost of doing business is just continuing to increase. Accommodation is certainly been bouncing around a bit. I anticipate that probably will start to level out now as we're seeing things get a bit more smoother across the industry in terms of just, we are now a few years out of COVID and how that is playing out. But this does lead to limited profit growth for the sector though as well. So high logistic costs, higher energy costs, insurance costs, staff costs, supply costs, these are all coming through as well. So while they might seem that prices are going up, there might be more money being generated, the profit necessarily is not showing a similar story. On that note though, talking about jobs, so tourism filled jobs. This is a number of direct jobs in the tourism industry. And again, we've gone back to the beginning of 2019 here, so you can see how that compares to pre-pandemic levels. I think the first key thing to say there, though, is that the number of jobs that are in the tourism-related industries are above pre-pandemic levels. So at the end of December 2024, we saw there were 713,000 jobs in the tourism sector, about 32,000 jobs higher than in December 2019 as well. While we're certainly seeing an increase in these jobs above the level of 2019, 2019 was 6 years ago. So a lot's changed in that time. Industries have grown. As Corinne also spoke to, the population has grown. So there is a need for more workers in these areas. And in particular, we're starting to see skills shortages in certain pockets there too, as well. I should say on this as well, we just released last week the March quarter 2025 labour force statistics. And it was good to see that the rate of job growth of tourism-filled jobs was actually above the rate of job growth for the total economy for the first time it's been in a while. Typically, it's been a bit behind. So it's good to see a slightly higher increase there as well. And related to that as well is looking at the job vacancies. So this is just over 1 year in terms of job vacancies from 2023 to 2024. I think there's two key points to say here. One is all the bars go down. So that's great. There's less jobs out there being advertised, which means that more jobs have been filled because we see the business count is still going up as well. So it's great. 40,000 less job ads are up there. However, the other key point is there's still 170,000 jobs being advertised. So there's certainly still a lot of vacancies, and this is not, as you can tell, not a comprehensive list of every job in the visitor economy there too. So there is still a bit of a national shortage there as well on that side too. Looking forward though, in terms of what we see coming in the pipeline, this is from our Tourism Investment Monitor report. So despite that skill shortage that we're seeing in some area, there is business confidence in a growing visitor economy. We're seeing investment in new infrastructure continue to come through. So this is showing the amount invested from 2019 through the latest 2023-24 in tourism. And to be included in this, as I had mentioned before, it has to be projects that are over $20 million or more. And you can see it's a significant increase from last financial year in terms of the billions of dollars that have been invested there, $63.4 billion. What's also good to see though as well is that it's not just the cost of things going up, but it's also the number of new projects that are coming in there as well. So 39 more new projects there too. The split there that you can see is the biggest bar in the middle there being arts, recreation and business services. It's pulled ahead of aviation for the second year in a row for the amount of big investment there too. But obviously a lot there coming in aviation and accommodation. We're also seeing when we split that out by state and territory, what's going on. Preparation for the 2032 Brisbane Olympic and Paralympic Games is certainly generating additional investment activity in Queensland as well. Just one other thing to touch on here, it's not included in this pipeline, but it is fully in the Investment Monitor report, is the mixed use sector. So that is buildings like the Canberra office where I'm in, where it's part government office, part hotel, part movie cinema as well. It is mixed use because we can't say that's purely built just for hotel or accommodation. However, we do know the number of rooms coming through from that, and that is increasing another 2,000 accommodation rooms and adding a further $12.3 billion in terms of build there as well. So there's another significant aspect to that investment pipeline too. But with a focus on that, I want to go with the time that we have to talk a little bit more just about the future of Australia's visitor economy. Now, the first thing to really touch on is to go wide firstly. What's happening across the world? This is from the UN. They have a lovely little dashboard on their website about, they're called the UN Tourism Tracker. And I think the first thing to point out is that recovery rates have really varied by region. coming out of the pandemic there as well. Globally, what we saw in Australia happened pretty much everywhere else. Domestic travel typically recovered faster than international travel for everybody. Then internationally, what we saw was much stronger rebounds in short-haul travel than long-haul travel. Now, that obviously makes it difficult for us being in Australia, as we're classically a long-haul destination for most areas. Looking then by the regions that we've got there shown on that graph, the fastest or most recovered compared to 2019 figures region is the Middle East, 134% of what they were in 2019. Then followed by Africa at 108% and Europe just clearing that 2019 level at 101%. So ourselves and the Americas we still haven't quite hit that full level there of what we were at pre-pandemic. And what we're seeing is APAC, Asia and the Pacific, is at 88%. When you drill down into the sub-regions there, which you can do on the UN dashboard, Oceania, which is we're part of, is actually one of the slowest global sub-regions to recover there as well. So there's still work to be done on that side of things. And there's a myriad of factors, and we go into this in a bit more detail. I'll touch on some of these in just a moment as well. But we have seen, for example, that huge growth out of the Middle East. A lot of that has been interestingly driven by ease of access. So aviation access, visa-free travel, higher capacity, and just making it super easy to get there and get through. So there has been that. On the flip side, if you've been looking at the global tourism discussion that's been going on, as we're entering Northern Hemisphere summer, there are protests across Europe about over-tourism in some of the major destinations, particularly Barcelona and Venice, where they're getting a lot of media attention around that. So while this is growing in some areas it has not been managed effectively, that communication and community engagement side of things as well. So there's always another narrative to the story and to the data as well. What we're looking at though, in terms of the forecast for international visitors, is that we expect, based on our forecast which were released back in December, that there will be a further 11.8 million visitors by 2029. So this is about a 40% increase on what we saw in 2024. We anticipate that expenditure from international visitors will grow to just shy of 50 billion there. So 48.5 billion there, which is about an 8% increase, annual increase over the next 5 years. Now, obviously, there's a number of factors that can push this up and push it down as well. Just calling out a few of these, again, there's a bit more in the forecast report, but 3 key drivers of growth that we do see. So firstly is Australia does have a very positive global reputation. Working with our friends at Tourism Australia, we see some of the data from the international markets, and we know that we're renowned for world famous attractions, natural beauty, safety and security. We're a clean, safe, green, nature-based, friendly, aspirational travel destination. So that's really working in Australia's favour. We also see going forward that there are close and growing ties with high growth markets. So some of those that are a bit closer to home, Southeast Asia, India being examples of that. And as you've already seen in terms of the infrastructure and tourism investment monitor pipeline, that is increasing to grow. And the aviation story is a similar one as well. We saw that big increase in last year in line with global increases in terms of aviation capacity, and that's looking like it's going to be increasing there as well. However, it's really important to talk about what could be mitigating this as well going forward. Reduced confidence regarding international travel, and that's particularly pertinent at the moment due to geopolitical risks, global conflicts, as we're certainly seeing. So while we do see, just on the previous slide, Middle East having that huge recovery out of compared to pre-COVID levels, I imagine that's going to start stagnating at the moment as well. Other major factors are also playing a role in that though as well, such as climate change and decision-making around that, particularly in the business and business event space as well, where decisions about whether to travel or not are guided more and more based on companies' sustainability policies. Another big factor, though, is global economic growth. So we've obviously taken into account a lot of information globally in terms of forecast rates. But yes, elevated inflation or interest rates, tight household budgets, a concern about what's going on, so a likelihood to save rather than spend, all this could influence that as well. And then the last major factor that we're just calling out there as well is policy changes that could reduce that attractiveness or competitiveness of Australia. So that could be things related to visas and education. But yes, the prevalence of the sustainable, accessible, cultural, sporting, and events, the tourism offerings that we do have, they do all provide many opportunities for growth. And overall, we do predict and forecast that it will definitely be a growth market. What's quite interesting, though, is just looking into that a bit too, in terms of what does that future look like and where it's sort of coming from. So we have grouped a few markets together up the top there with Southeast Asia because it's an interesting story. So when we look at the Southeast Asia market there, and down the bottom, I've got a little note. It's actually about 11 different markets, but 6 of them make up 96% of that. So Singapore, Malaysia, Indonesia, Philippines, Vietnam, and Thailand. It was right up there in terms of visitation numbers in 2024 with New Zealand. And what we see is the growth from that market is going to be quite big as well. So it is going to be bigger than, China, bigger than New Zealand, some of our individual markets as well. What's really interesting, though, as well, is while we do see that growth recovery coming from China, and again, it's a bit of a global thing, we see China is still coming back, but at a gradual pace. Even with the forecasts out to 2029, as we do, we just see China getting back to #1 position in late 2029. What's quite interesting, though, and again, you can see this on our live framework on the dashboard, is that we actually have a more diverse inbound visitor mix than in the past. So there's a greater mix of countries coming to Australia at the moment as well, which is what you want, more stability in terms of a greater variety of what's coming in and out of the market there too. On the domestic side, as Corinne spoke about, this is really the huge part of our visitor economy. And again, the forecast for that is an increase. 20% increase in trips between 2024 to 2029, growing up to 390 million trips for about 129 overnight and 269 million day trips there. And coming up to $174 billion visitor expenditure in the domestic market is what we're predicting from that as well. So we can see that Australians have demonstrated this enduring appetite for travel, and the domestic forecast is really showing that too. So interesting presentation from TTF just the other week showing that even in terms of discretionary spend, travel is still being very much prioritised by Australians, that domestic travel side as well. The 3 drivers of growth and 3 key areas of risk, though, that we're seeing, just calling them out, is firstly, as I just said, that travel intention. Consumer travel intentions, they're holding up. People are wanting to travel and prioritizing it with the discretionary spend that they have. Cannot talk about travel visitor economy without talking about events. So we have a big pipeline of international events, and we know it's a driver as well of travel intentions there too. So it's obviously going to be pushing people to go for traveling, staying when they get there as well. And that's on both the business event side, leisure, holiday, the lot. Third key driver there is the rise in household discretionary income. We've already seen a couple of interest rate cuts come through, and it looks like from what we're seeing and sort of were forecast initially, there is going to be an increase in household discretionary income, and following that, household spending as well. However, on the risk side, the first one to call out, though, is the weather events and natural disasters. There's increasingly large, uncontrolled, unpredictable, damaging weather events. What we're seeing when talking with stakeholders in areas, that it's moving a bit from not an if this happens to us again, if another cyclone comes through, but when the next cyclone happens, how are we going to handle that? The other key factor, just given the size of Australia, is the domestic aviation market. So if we do see high domestic airfares, an increased cost in jet fuel, reduced airline competition, then that can obviously weigh on travel demand around there as well. And the last one there being that aspect of looking at a trip and going the cost competitiveness of going domestic versus traveling outside of Australia as well, doing outbound travel or two. I think as well, just harking back to something that Corinne talked about in terms of visitor spend as well, we do anticipate that those spending patterns are likely to continue to change as well as travellers look to ways to optimize their budget, wanting to have that trip, but also make sure it doesn't break the bank as well. So might continue that aspect of slightly less nights out for dinner when people do go for a holiday, opting to cook maybe 1 or 2 nights when they're in as well, and mitigating some spend where possible. In terms of actual visitation and trips from the domestic side, this is what it looks like across the year there. So many more day trips than overnight trips. That makes sense. It's a bit easier to do a day trip. But where we're sitting for 2025 and what we're sort of seeing and hearing a bit as well is that 2025 is going to be pretty steady, just sort of tracking on a low level there with domestic travel. And that's also coming with a bit more shorter trips, a bit closer to home. As we saw right at the beginning, there might be more trips, but there's less nights as well among that domestic overnight audience there too as well. But after that, 2026 onwards, so in about half a year's time or so, we're starting to see that ratio and growth pick up there a bit too. Last thing I just wanted to touch on for today is just again, zooming out a bit and looking at some of the broader trends that we're seeing. So these are things that we're seeing from our own data, but also globally, a few things. There's obviously many different trend reports out there and ideas. So we're just focusing on a few that we're really seeing at the moment here. First one being agritourism. So we saw that that grew in 2024, and it's anticipated and expected to grow in 2025. And that's due to a couple of reasons. This sense of authenticity, connecting with local culture, supporting regional areas, this authentic experience. That seems to be an area that will still have growth coming through. Affecting many decisions and from where to go, where to host an event, what to do, is going to be sustainable and regenerative travel. This has been a trend since 2022, where it really came out strongly, and it's still quite present. So sorry if you're not, if you've already heard about it, but it's worthwhile calling because it is an influential factor on decision making there as well. And the third one to call out is First Nations experiences. So we've seen strong growing demand and participation in First Nations experiences from both the international side and the domestic as well, in both leisure and business events, or business travel, I should say, as well. So we expect this will continue as well. And I think what's good about these trends is that Australia really is in a favourable position to capitalise on these trends for the coming years as well. So I realise I've covered a bit there, but 5 key points for you to take away. First up, the visitor economy continues to grow. We do see that total spend is high, visitation figures are increasing, and there seems to be strong domestic travel and a rebound in international visitation there. However, you got to take that within what's really going on in the detail of it as well. So while we see that there is growth, that domestic travel it's a bit of a mild increase for 2025. However, the domestic overnight travellers really remain the engine room of Australia's visitor economy, accounting for 2/3 of total spend. So even as we see travellers adapting their behaviours in response to cost of living pressures, it's still a huge part of it. Number 3, international markets are diversifying. We are seeing greater growth out of Southeast Asia than before. China is coming back. Western markets, though, obviously New Zealand, UK and US, they're also still in our top 5 there too. Looking on the industry side, in terms of tourism businesses and jobs, they are at record level of highs. However, that does not mean everything is resolved there. There's clearly still challenges that remain. You see the amount of jobs that are still out there, workforce shortages and cost pressures as we saw, and the infrastructure pipeline is not slowing down. There's still more being built and coming in too. Last point to leave you with though is from our forecasts. The outlook is positive. So we do see continued growth in domestic and international travel through 2029, supported by strong demand, major events, and investment. And lastly, you can download the full report there from our website, tra.gov.au. So thank you all very much. Great to see you all today. I'll stop sharing now and we'll just jump over to Slido with Bronte to see if there's any other key questions. I think Bronte's been answering some of those as we go though as well.
Yes, we have been. There are a couple of questions, I think, which we do have answers for there, but might be useful for the broader team. One of which is, given the current political unrest, weak Aussie dollar and competitive aviation industry, can we expect greater inbound travel from our emerging markets in Southeast Asia in 2025, or will our traditional markets of UK, USA, New Zealand and China hold the market share?
That is a good question. I was just jumping into Slido there as well, but I haven't actually got it up. How about I'll say a little bit on that, then I might throw to Corinne, who's been pulled together a lot of our forecasts in there. So when we do look at the aviation capacity coming in from these various markets, we're seeing growth across most areas. The short haul is what has really been growing a lot worldwide coming out of the pandemic. So our anticipation is that short haul supply, seats, flights, capacity will continue to grow from those markets in that Southeast Asia area and India as well. Corinne, did you have anything to add to that?
Similar. So our current forecasts show growth from a range of inbound markets, so expecting growth from most of those source markets. Southeast Asia, though, is our largest grouped source market, and we forecast that growth from Southeast Asia will be the strongest growth over the next 5 years. So TRA, we published our last forecast at the end of December. We will update those forecasts this year and we'll publish revised forecast by the end of this year, calendar year, towards the end of the calendar year. Thank you.
Great. I know we only have a few minutes there, Bronte, but any others sort of pop up that'd be worth sharing with everybody else?
There's a couple around further data at different levels, so aviation, arts and recreation, for example, further breakdown of that, or at a state level for other bits and pieces. And I guess to that, I would just say many of our other reports do have a state level breakdown, whether it is the tourism investment monitor or the tourism forecasts at a domestic travel level.
That's a good point. Yes, for those looking for more granular data, we certainly do, given the highlights. This is very much a highlights reel of the benchmark report, which summarizes several of our other reports there. Pretty much every report we have a breakdown by state and territory. For a lot of our reports as well, we also have the data for people who do want to jump in and play around with it. The Excel files there are also available, but just thinking of a few that we touched on there in terms of business counts, investment monitor, even the forecasts for domestic level as well. We do also do those at a state and territory level as well. I would though also encourage you to chat with your STO, so your tourism office, for your state and territory too, because they often have fantastic dashboards and information and reports relevant to the state and territory on their website as well. Great. Well,
one more.
Sorry, yeah, we've got 1 minute left. That's
There's a final question here which has just come in. Will the continuing trend in sustainable and regenerative travel affect the visitation growth forecasts due to the long-haul air access consideration for Australia?
It is a factor, without a doubt. It has to be. We're seeing growing global interest in sustainable aviation fuel as well. Different areas popping up in terms of refineries around that, different approaches to it. The EU is going to soon be passing some regulations around that, around sustainable aviation fuel. So probably what will happen is, as international companies need to abide by that, they will start to figure out how to best do that within that market and what needs to be done in others. So it's certainly going to have an impact on the Australian market, I would say, across this as well. And it's definitely one of the many factors that we take into account for our forecast report. I'll just say on that as well, our forecast report, the new one, we do that annually. It comes out in December. So we actually start working on that next month. So it takes a good amount of information that we pull into that, but it'll be in there as well.
Hey, hi Garrett, it's Grant here. I'm part of TRA as well. Without being able to quantify it, we hear a lot about the impact of sustainability, particularly with respect to business events. So a lot of the corporate groups that come out for those business events will sort of, through their corporate plans and sustainability plans within that, will have sort of caps on the amount of emissions a year or a number of flights and things. And obviously traveling to Australia for those events tends to involve more emissions than perhaps traveling short haul for some of those events. So that's where we hear a lot about in our engagement with partners in the industry, that the sustainability side may particularly have an impact. Yes,
it's a good point. Great. All right. Well, I realize we're out of time there for the day. So thank you all to everybody who joined us. If you do have any questions, then you can get in touch with us via tourism.research. Very easy one to remember there, at tra.gov.au, and that'll get passed on to the team as well. But everything's available also on our website that we went through today too. Thanks very much.